All right, good morning. Today is Wednesday, August 31st, and it's the last trading day of August. And it's been kind of a wild month. And before I get started, I wanted to mention that we've been having some internet connection problems around here in my area. And as you may have noticed last week, the show got cut off, just disappeared because my internet went out. And boy, I think it was out for hours. And the funny thing is that we've been having this problem for a couple of weeks now, and it's not just me. So it's Comcast is having some issues in the area, and the reason I know that is because they text me and they say that they're aware that we're experiencing an internet outage, and they give me a time which should be resolved. So anyway, long story short is if for some reason the show gets cut off again and I just disappear, it's because my internet went out. So, and it's been happening a lot recently. I don't know what their issue is, but it's not something on my end, and it's extremely frustrating too. So we've had multiple outages over the past couple of weeks that last anywhere from a few minutes to several hours. So not much I can do about it. Um, Maybe they need to upgrade their equipment or something. But years and years ago, I had a very similar issue with the internet cutting out a lot, and it took a long time to resolve. I had the cable guy, but it was just me. So this time it's not just me; it's my neighbors as well. And anyway, years ago I had a similar issue, and it turned out that there was a problem at the main junction box at the telephone pole across the street. There was some insulation. Insulation was like rubbed off of one of the cables or something that fed the whole box, and so anyway, that was a big hassle getting that resolved. But I just want to make you aware because I'm sort of at the juncture right now where at any moment my internet can just go out and be out for an undetermined amount of time. And if that happens, then the show stops and I'm gone. So, with that said, let's take a look at where we are in the market. And last week, before I got cut off, I was starting to get into some real interesting nitty gritty about this. So as you can see, oh, let me fix my chart a little bit. As you can see, the this chart goes back to the beginning of the year, and amazingly enough, if you draw a trend line down across these highs, I believe I was doing this last week. Draw a trend line across those highs, and it basically intersects right with that 200-day moving average, which is the blue line. And so tremendous rally off of the lows up to that 200-day moving average, and then literally just rejected right to the. I can never get these things perfect the first time, but I'm kind of I'm kind of a stickler for. I mean, the reason I like to have it so perfect is, and that's close enough for government work, but is that I mean it's just extraordinary. My cat has something to say. Extraordinary how this rally carried all the way up to the exact, I mean literally the exact area of that trend line and the 200-day moving. I mean those were you could it's uncanny how they intersected right at the same point. See, you could have a 200-day moving average sloping down above the price action and say, well, that's overhead resistance, kind of like the Qs. The Nasdaq never made it to the to the 200-day moving average, but and then of course, you could also draw a trend line down across the highs and say, well, there's another point of resistance for a rally, but for the two of them to basically converge on the exact day that the market, reversed course, rallied up into overhead resistance and reversed. And so, like I was saying last week, there's this little zone here. I'm not sure how I can mark this on the chart. Well, I guess I could put another trend line on there, or I could play around with some of these drawing tools. Yeah, that little area right there was kind of a big resistance point here recently. There we go. From back over here, right? And so a lot of sideways chopping price action in here at the beginning of June. And then I sort of figured that the market would struggle in that area, which it did for a few days, because it only made sense. I mean, big congestion area there between, say, 4,100 and about, just under 4,200. But that extra little push in the direction of the trend, for like 5 days. I think that probably, well, quite frankly, the sentiment at the time, I mean, everybody sort of expected the market was going to keep rallying. See, the sentiment, in my opinion, the sentiment is kind of a function of price and time. And so if a trend develops and you get a long enough period of time where the market keeps moving in one direction, then people start to change their mind and assume it's going to continue moving in that direction. And boy, by the time it rallied up here, I think that most everyone thought that, hey, the worst is over, this and that. But the funny thing is that, obviously the Fed is coming into play here. There's a lot of macro. The macro picture, I think, is what is primarily affecting the market here. And the consensus seemed to be, like during this rally here, they built up sort of a consensus that the Fed was going to, with the economy slowing down and the last inflation print was down a little bit, the consensus started to build, and of course, all the talking heads on CNBC, that the Fed was basically going to, and the market itself, the bond market, pricing in, that the economy was going to slow so much that the Fed was going to be forced to cut rates. And so, that's probably what they call the Fed pivot, and that's probably what's likely to happen down the road, next year. And so, everybody's trying to game what the Fed is going to do. And the funny thing is all these Fed speakers day after day, and even during this rally, coming out talking hawkishly, like, they're just bound and determined to fight inflation. And so, anyway, this sell-off here, which was, what was that? Friday? Yeah. This last Friday, so Powell was, and like I was saying last Wednesday, everybody's kind of waiting on what Powell's going to say in Jackson Hole, and you can see how it affected the market. I mean, huge long-range day down because he reiterated the fact that the Fed is 100% committed to fighting inflation, and they're basically, he took away the idea that they're going to back off until they see some actual data. Speaking of which, I have this handy little chart of the inflation rate here, and which goes back, this is last August, 5.3%. And so you can see, you can just basically see inflation kind of getting out of control here. I mean, and you talk about out of control. I mean, even a 5% inflation rate, the Fed has said, 5% inflation is not acceptable, right? They want to get it back to 2%. And in order for this to go back to 2%, I mean, year-over-year comparisons are going to be interesting as we go forward. But as you know, the price of everything's been going up, and of course, they're blaming supply chains and this and that, and like I said, the macro picture is affecting everything. But even if this does start to come down, right? And I mean, suppose the next CPI print is, seven something, right? Which would be welcome. And I think a lot of it is affected by oil prices, and oil prices have come down significantly. I believe, well, I don't believe, I know that the price of oil was up to, whoop, here we go. Price of oil was up, spiked up here earlier in the year, February and March. Look at that, 130 bucks, and it's been extremely volatile. Price of oil has been crazy volatile, and so, in the 90s now, even some dips below 90, and so it's spent a lot of time over 100. It's spent a lot of time, well, a lot of time. It's literally spent the majority of the year over 100. Now that it's come down some, that's going to probably have that's probably going to have, a positive effect on the inflation rate coming down. So, but there's a lot of other things out there that a lot of other things that go into the mix too. But I think oil is probably the primary driver of inflation, since everything, all of the food has to be delivered on trucks, right? So anyway, if the price of oil starts to trend back up, which is entirely possible, because I'm sure you've heard of all the crazy stuff going on in Europe. So the whole Russia-Ukraine war is also something that's driving this mess, which is the macro picture as far as being a real mess, but it is what it is. And so, I'm sure you've seen everything about Europe is gearing up for, well, basically they're going to have, extremely high. I guess natural gas is the big thing, and I don't really follow natural gas that much. And of course, that's a regional type thing. But anyway, it's kind of a mess, and so we want to see oil come down, price of oil come down. That's going to help inflation. But the Fed, um, the Fed has just been talking hawkishly for the entire time, and the market seems to think that it's been conditioned, I should say. It's kind of the Fed's fault that over the years, I remember back in 2018 was a great example. 2018, they attempted to reduce their balance sheet and raise interest rates, and then the market tanked, and into the end of the year, by the way, and they had to change course. Well, they did change course. they talked they talked tough, and then when when the market fell, they reversed course. They quit raising interest rates, and so, and I'm thinking, back in like 2016, there was a global economic slowdown in China and all that, and they did something similar. I don't remember that as well, but I do remember 2018 pretty well, because I mean, the market tanked into the end of the year. And so it was having a rough year anyway. The funny thing about 2018 is that January was like a really good month, right? It was one of the best Januaries as far as the S&P in years. And you heard a lot of talk about the January effect, which, by the way, may come into play this year. But the January effect is something like, so goes January, so goes the year. And so anyway, in 2018, it was one of the best Januaries in, decades. And then the market ended up with one of the worst years in a long time. So it was basically didn't work. And hey, looking at this January, it's going to be interesting to see, how the year ends up. So anyway, um, market rallied into resistance, got turned back at what seems like almost a ridiculous coincidence area, and And then, kind of August is typically a dull month anyway. Over the years, it's been kind of there's some long range days here in August, but not very many, right? These are some kind of tight ranges. If you just look at the month, it's kind of it's kind of a nothing month so far until last week, right? And so that sort of set the tone going forward. And I saw somewhere somebody mentioned like waves or whatever, and I find like wave analogs interesting, like the whole 5 wave thing, but I don't necessarily put there's no sort of indicator or theory or anything that I think is infallible and that you put all of all of your effort into. But anyway, I was looking at this and I was thinking to myself that that you got one wave down there, right? One, two, three, four, and then there's always a fifth wave, right? And so it's actually kind of interesting the way that I'm able to move this, right? So let's do that again just for the fun of it. It's actually I've never actually done that, but moved it like that. So if 5 waves, one, two, three, four, and so now we would be on the fifth wave. And of course, nobody knows how the fifth wave is gonna. I'm not that up on it. And and the other thing is that with wave theory, typically it's 5 waves up and then an ABC correction, right? So you could go like, A, well, you could say A, B, C, and then rally. But so anyway, that's all fun stuff. But every time I look at Elliott waves, I see differing opinions on what wave is what, and of course it's based on time frame. But what I just did there, the whole 5 wave thing is interesting because now we'd be on a down wave 5, which is, I believe, typically sort of symmetrical to the third wave down. But anyway, back to what I was saying before. I don't know how I got sidetracked on that, but I did see something about that this morning. So here's the cues, right? The other thing is all these indexes, they've been squeezed in between the 50 and the 200 here, and the same kind of thing with the cues here. Everything's similar, but let's just draw this trend line here. So this is kind of, the cues have a little bit of a different sort of behavior because they managed to break the trend line, like poke above the trend line, and never quite made it up to the 200 day. and and so this, I guess, would be considered, I guess, what you would call a bull trap, right? It's a little bull trap. So there's been lots of bull traps. We go back to, I'm wondering if, let me try something here. Yeah, let me just try something here because if I leave the drawing tools open and have my chart like kind of over to the, expanded a little bit here, might make more sense. So we looked at this too, many times over the year, over the current year. You have all these horizontal levels that turned into bull traps too, right? I mean, that you see that after the initial sell off and the rebound, and then you can see all these touch points here. So that was a big level of resistance earlier in the year, and the market managed to rally up similar to what it's doing now and poke above it, and like right there, was the point where, I mean, we were within spitting distance of the highs again. And so I'm sure that probably, like right at that juncture after that rally, um, there's a bull trap. And then, this latest one has been kind of similar to that. You know, this congestion area breaks out, and I was actually pointing to these two big green up bars here, right? Like as we were starting to break out of there, I was looking at these two thinking that, okay, well, there's another big horizontal level of resistance. And so literally the same thing happened, whether you put it here or whether you put it here. Um, the market managed to rally, break above that, and then anybody that thought that the market was breaking out, right, it reversed shortly thereafter. So these levels of resistance, it's been an really insidious sort of year here. Um, I wanted to look at. You guys know that I like to look at ARK as I like to use ARK as sort of a proxy ETF for the high momentum, stocks that well, I mean, that's what it is. It's high momentum, theoretically growth stocks or whatever, tech stocks, momentum stocks, and you can see that it was obviously we know it's tanked and tanked and tanked and tanked, and then it kind of formed a little bit of a double bottom right there, and then began to trend up in this channel, which, these channels, I mean, yeah, I don't know if you call that a bear flag or, but these rising channels, sometimes I call them a bear flag, I guess, if they're real short or whatever. But these rising channels like this, when they get broken to the downside, then typically, it's just a standard technical pattern, right? You have a trend in one direction, trend down, and then you form a channel like this, and then when it breaks down from it, well, you get a continuation in the direction of the trend. And so you can see what a disaster this is. And the funny thing about it is that, a lot of these, when I look through charts of a lot of these high momentum tech stocks and that, they peaked well before, they peaked like last year. There's a whole bunch of them. And so you can basically see what's happening there. And I mean, here's the thing is, I like to look at Zoom here. Zoom is this is an incredible chart. Like anybody that remembers the .com era will, this is what ended up. This is what the .com, back in, what was it, 1999, 2000. In 2000, when the Nasdaq and the whole .com implosion happened, this is what it basically looked like, right? They had gone from, almost nothing and just parabolic rallies into the stratosphere. And if you go back over here, somewhere around 450 to $550 and see what the consensus was and what people were saying about this. Now, of course, everything's different here because we had the pandemic, right? Like the pandemic kind of changed everything. And so the pandemic and the war in Ukraine are sort of two wild cards that have had a profound effect on everything that's transpired since. But anyway, this is just crazy because somewhere over here, This is what reminded me of it. Somewhere over here, and I read this article, right? I think I might have read it on Yahoo Finance where um, ARK, like the ARK funds, put out some kind of research paper on why Zoom was going to 1500 is like their price target. And yeah, basically they missed earnings here. And look at this thing. I mean, so, part of me part of me says that, the .com implosion has already happened, right? I think today they're talking about Snap, right? Yeah, Snap's actually up. Snap's laying off 20% of their employees, right? But I mean, look at this. It's the same exact sort of thing. Um, so there was like the pandemic sell-off, right? Am I right? Beginning of 2020. So, I mean, this is basically the .com implosion that's already happened. And so, and the thing, I mentioned this before. The thing about it is that stocks like this, I mean, I just can't see it ever getting back to the highs, right? I mean, some of them may make it, like obviously Amazon did. Everybody points to, Amazon and, over the decades, but a lot of these stocks like Zoom and Snap, I mean, if a stock goes from $80 to 10, um, I mean, I suppose it's possible that well, obviously it's possible it can rally significantly over the years if something positive happens. But as far as like ever getting back to this range up here, between 70 and 80, here's something interesting. The Renaissance IPO ETF, right? This is another sort of poster child for what's happened, over the past couple years in the market. So. This is basically an ETF that is comprised of all the new IPOs, and I'm not exactly sure how it's structured. I mean, if you were interested in it, you could always see the details, but this was a hot item back here, right? So there's your pandemic sell-off. This thing was $20, and then you know the Fed went crazy and created trillions and trillions of dollars to offset the detrimental repercussions of the pandemic, and as you know, sent asset prices to the moon. And here's another one. This peaked. What's interesting about this is how it peaked, around the same time that ARK did back in, early 2021. And so the peaks in a lot of these companies, momentum stocks, IPOs, SPACs, remember all that SPAC madness and all that. And so my point is that now that these things have already, I mean, they've already been destroyed, right? Oh, and speaking of bear flags or bear channels, this one's looking a little sketchy here too. I mean, it's got the same. It hasn't broken down like ARK has, but I see this very similar pattern here. So, um, just something to keep an eye on. The Dow. The Dow has managed to. Dow has managed to do sort of okay, right? Um, but I mean, it's still, that's still a nasty looking. This is kind of a rounding top look to me. And is this a log chart? See, let me just see. No, that's not a log chart. Interesting. Interesting. Okay, let me fix the chart here. There we go. Yeah, a bunch of times recently, like the chart I'm looking at, all of a sudden turns into a log chart, which is fine. I mean, looking at log charts is perfectly fine, but I'm used to the linear charts, especially just going back maybe a couple of years on a daily chart. I don't think log is the preferred view. But anyway, yeah, I mean this is kind of a rounding top, and it's easy to sort of spot, the zigs and the zags and the peaks, and so you still on the Dow, you still have, there's the all-time high, right? Big sell-off, and each, save this day right here, but basically the bigger picture here, and I suppose you go to a weekly, which I hadn't even got to the weekly charts yet, but what you see on the weekly charts is a series of lower highs. And so this last high right here, just a nasty reversal. Speaking of which, that's where I was headed with the S&P earlier, was the weekly chart. And so this gives you sort of a much better picture. Interestingly enough, so I had the 50 and the 200, right? And so this 50-week moving average is almost identical to the 200-day moving average, and you can see how, you can see clearly on here how it got rejected once it rallied up to that. So that's pretty interesting. Long as we're over here, one other thing. Today is the last day of the month, right? Last trading day of August. And so at the end of today, the over-under is 4,000, which quite honestly, the past 4 months, this month and the past prior 3 months, 4,000 has basically been the over-under. So as we speak, we are slightly below 4,000. Since it's the last day, you just, of the month, you never know how they are going to position themselves. So we could easily still close over 4,000. Or we could sell off, which you probably, theoretically wouldn't be what the majority of participants want the market to always go up, right? like CNBC, right? It seems like, and I watch it mostly with the sound off, but over the years, I watch enough CNBC to know that they basically feel as though it's our God-given right for the market to go up every single day, right? Like the market's supposed to go up all the time and every day, and if it doesn't, then um, they talk quieter and there's sad faces and lots of red on the screen and that type of thing. A lot of hyperbole, but here's the thing to notice is we haven't had two, and I noticed this because I look at these monthly charts, the weekly charts and monthly charts intra-month, but they finally caught on. Yesterday they were talking about how there hasn't been 2 up months yet this year, which is highly unusual. It's very unusual. I mean, you go back and look at prior years and try to find a year. Speaking of, as long as I'm on the monthly chart, let's look at 2018 here. Now this is a little bit different of a year, obviously. You can see that, January was a big up month, and then all of a sudden things started to get dicey in February and March, but then it rallied to new highs before it tanked into the end of the year. And this is when the Fed was raising rates. And so that's another thing I wanted to mention real quick is you're starting to hear, and I kind of believe this myself, talking about the macro picture, is that when things happen, like when the Fed raises rates, there's a long period of time that it takes to sort of work its way. The effects are gradual and theoretically, can take 6 months to work its way through the economy. Same with oil prices, right? So when oil prices rise and fall, it takes a real long time for that to sort of permeate its way through the economy and affect different things. So it's kind of like, throwing a pebble in the water. It's the waves take a long time to finally dissipate, and it's the far out one, the repercussions that occur that are important. And so, in theory, with all these rate hikes that we've seen. Let's see, well, we've seen a 25, a 50, and two 75s. And then, of course, there's another one coming in September. And so, all that's going to the whole rate hike thing is going to probably start manifesting itself, early next year. And I don't think anybody knows, how that's going to happen. Another thing to keep in mind right now is that the Fed's balance sheet is they kept talking about balance sheet runoff, but theoretically it gets serious now in September, or actually starting this week or whatever, the Fed balance sheet. So anyway, the big sort of thing right now is obviously the Fed is pretending that they're extremely hawkish, and the big question is whether they will follow through with actions. And as I alluded to earlier on the show, in the past, and I mean over the past years and years and years, they've pretended to be hawkish, and they pretend like they're going to reduce the balance sheet. They did that back in 2018. They pretended they were going to go into an interest rate hiking cycle and run off the balance sheet, normalize the balance sheet, I should say. And you can see December here. They basically they chickened out. They chickened out, and so everyone's expecting them to chicken out. Although, we've already had like the most serious rate hikes that we've seen in, decades, I suppose. And interest rates have actually gone from nothing. The whole curve is over 3% now, I believe, and so that's one of the fastest changes in interest rates in ages. So, and it all goes back to, this monster they created, right? I mean, you've seen and heard that the money supply has been doubled. The pandemic emergency pandemic measures have essentially doubled the money supply, and so uh, over history, whenever a government waters down the money supply, I mean, I saw it was some college professor of economics, basically on an interview on CNBC said that inflation is always a monetary phenomena, and of course, the government spending money like I don't even want to get into that, the way that they're throwing money out there, but spending money, spending money, spending money, and so is what you get. But anyway, so the market itself right now is in a sort of a precarious spot, and the weekly chart's pretty nasty, to be honest with you. I mean, this is these other this like sort of little top here. Well, this is kind of if I put this on a candlestick, you got kind of like this big rally, spinning top, or whatever you call that. I mean, I don't know if that's a spinning top, but I mean that's just a clear reversal, right? And of course, nothing happens too quickly on a weekly chart, but that's just nasty. And so this is a little bit different look, but on the open high low close chart, I mean clearly it's big rally, reversal, and that's pretty bearish. Now, that doesn't necessarily mean that, it's just going to go straight down. That would actually be kind of unusual. Maybe I would expect, well, I mean, I have no idea where it's going to close the week and what the month's going to look like. But, typically September things start to pick up. Oh, and that's something else to keep in mind too, is September is traditionally the weakest month of the year. So brace yourself. Look out. Right? It's been just a rough market all year. I mean, just a rough market, and a lot of that is due to the macro picture. And, back in the old days, they used to say 3 steps and a stumble, meaning that when the Fed hiked rates 3 times in a row, that the market, started to stumble. And so we're seeing that, and a lot of participants nowadays, have been sort of conditioned to think that the market only goes up, and the reality is setting in. And quite frankly, let's look at one last thing here. I want to look at Apple because Apple is one of the primary drivers of the whole market, and so this is not real pretty here. It's not real pretty. We just had a tremendous rally to within spitting distance of the all-time high, and boy, I mean, you talk about, it's like a gravestone doji there. So after this big rally, but this is going to be, depending on, so goes Apple, so goes the market, is my opinion. And quite frankly, with the slowing economy and all the problems out there and the macro picture and all that, it's hard to see, it's hard to, and what do I know, right? But I was thinking the other day that, as far as iPhones go, I went from an iPhone 4 to an iPhone 6 to an iPhone 11. So I've had three iPhones since they were invented, right? And my mom recently, like about a year and a half ago, got her first iPhone, and she got something like a cheaper one, an XR. But here's the thing, they all run the same software. They all run the same operating system, and so that's something that you really don't hear anybody talk about. But why would I upgrade, or why would I buy a new, $1,200 iPhone that runs the exact, has the same icons and runs the same software and the same apps and does everything as, any other one? And so I don't quite get the upgrade cycle. We've reached the point where, the cameras are about as good as you can possibly want. Quite frankly, I look at some of my old pictures and I wonder to myself if I like the old pictures better, because now the cameras are so sharp that every single, if there's a speck of dust, it shows up in the picture. They're almost too good now. Every little detail and speck of dust is going to show in your pictures, whereas a couple back when I had the 6 or whatever, there was some of the pictures I think may have actually been a little bit better because they weren't quite as high contrast. But anyway, so I don't know. So goes Apple, so goes the market. Technically, if you didn't know what this was, if you just if you had no idea what this was, and you looked at this chart, and I mean, here we are. Like this little current down leg is essentially sort of a mirror image of this one, as far as what the top looked like. And so you can see this one went a lot further than, went a lot further. So you could look at this and think, well, geez, if there's any symmetry to this at all, and maybe not. I mean, maybe, even if it just went down to this point, obviously there's some support here. There's a weekly chart. But if there's any symmetry at all to this, then look out, right? So anyhow, one last look at the SPY on a line chart. Same thing here. It's sort of about, I love symmetry on charts, right? Symmetry on charts and looking for little patterns that sort of repeat themselves. And speaking of which, let me do one last thing before we go here is, and this is gonna be a little bit difficult to point out, but I was looking at this the other day. this rally in March, and then this the sell-off right afterwards, like this little down, a little bit of a rally, and then kind of looks a little bit like this. If you take it took more days here than to happen, and here it happened in like you reached the peak and then you had two down days and a little pivot low and then a little bit of a rally and then a lower low. Here, you had like four down days and then, a few day rally and then they sort of dropped the hammer. But anyway, I'm kind of looking at this peak here in March and what happened afterwards and looking at, this rally and what happened afterwards. And so it's going to be interesting. Now, now that we've sold down, there's just no telling, right? There's no telling what happens, but um, there's going to be relief rallies and all this and that, but there's a 50-day moving average. I would have to think that I'm inclined to think that September is not going to be just, sunshine and rainbows for the S&P 500. So we'll have to see. Anyways, I didn't. We got a couple of open trades in energy and been extremely volatile. But actually, yesterday it rallied big on Monday, got hammered yesterday, and today is gone from red to green. So it's going to be really interesting to see what happens with that. So anyway, I will go ahead and end it now, and I will see you back here same time.